Welcome to the video on capitalizing interest again, part 2, I guess. This time we're going to do the same dollar amounts, except we're going to do the amount that's greater than the amount that you initially borrowed. So the only thing we changed on this one from the last one, we still have the initial borrowing here. We're still going to complete it. I got to get that one changed. December 31st, 2015. So that doesn't change anything. And what changes, however, we initially borrowed $750,000. Again, we go through the same format. In this case, the first $750,000 that we have to capitalize down here will be at 8%, and everything else will be at the general rate that we have. So again, we find out how much interest is subject to capitalization by doing the same thing we did before, multiplying things out. So we have equal 2 million times 10% in that one, and equal 3 million times 11%, and that gives us a total of, we had those two together, 550,000, and a grand total then of 60,000 plus the 530, or 590,000. The general rate is done the same way. You will take the 530 divided by the 5 million, or 10.6. This is exactly like we did before. The difference was, remember, this was $1 million before, now it's 750,000. Okay, we go through the same process. The 500,000, and again, this is for 12/12ths of the year. So we multiply those out. I know we can do that in our head, but I'm just going to go ahead and do it anyway. And then we have 400,000. And again, this is from March 31st. So April through, and that will give you 9/12ths of the year. And multiply those two out, gives you 300,000. And then we spent 600,000. And that was for 3/12ths of the year. And you multiply those out to get you, what we're looking for is the weighted average. And then we spent 250,000, and that's for 0 part of the year, which gives you 0. Okay. And then what we'll do is we'll add these up, just like we did before. Okay, so we take those over here, the summation button, and we add them up, and that gives you 950,000, just like we did before. The difference, however, 950,000 is more than the 750. So in the first one, we'll take the 750,000 times the 8%. I always like putting an equal sign there. You don't have to, but I like to. So we'll take equal basically the 750 times the 8%, and that gives you the 60,000, just like we did before. Now, for the amount that we need here, we would have the 950,000 that we have to capitalize minus the 750 times the 10.6%. And again, that's equals. Okay, I'll move this over a little bit so you can see, because I want the formula there. So we'll have equal, I'll do the same thing here, 950 minus the 750 we already have capitalized, times our general rate of 10.6. And that gives us $21,200, or a total to capitalize of the 60,000 plus the 21,200, or 81,200. And again, our journal entry is interest expense, and that's for the equal would be the 590 minus the 81,200. Then we have the building, IL And that one is for the 81.2. And then cash is these two added together. Whoops, try that again. I missed it. There we go. Which should equal the 590, just like we did before. And again, let's make this a little bit nicer. The indentation, because it's a credit. Okay, same way on the dates. See what we did. Okay, 1/30/15. You add them down. And the last one again is 12/31/15. Okay. And again, we spent the 500,000. And if we copy them down, we have 400, 600, and 250, which is what those are, because we did spend it even though it was the last day. And we also have the 81,200 here. And again, we do the same thing for the balance. We have the 500,000, and then we add what we spent and our amortized or capitalized interest. And on this one, we would have spent a total of 1,831,200. So this is the amount we would use to capitalize the interest. So it's done pretty much the same way. The difference is you have to use the 10.6 up here. The amount that you initially borrowed, the 750, is capitalized at the full rate. And then what you have is a 10.6 for anything excess. And we see we had to capitalize 950,000. So this first 750,000 is at 8%. And then the next 200,000, which is the 750 from the 950. So the next 200,000 is capitalized at the general rate of 10.6, and then that's the amount you actually capitalize. Now, capitalizing simply means you're taking it out of interest expense and putting it into the building account. So it's increasing the value of the building. The 1,831,200 is the amount that you would actually use for depreciation purposes. Okay, the next one's going to do multiple years. And that's the next tab we'll do, and I'll see you then.